This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
Biggest money traps people fall into. One of them has to be, or it can't be, lottery tickets. Like that's a safe bet. You bet $2, a time.
Do you play the lottery? How often I'm just going to assume you do. How often do you play the lottery?
Oh, shoot, I don't know. Not often.
Not often.
No.
Only when it's over $1 billion. So are you one of those people?
Yeah, I mean, what's? I'm not going to risk $2.
You know your chances of winning are less when you're playing for the big dollars, the $1 billion, than if you pay for the smaller prices.
That's what they say. That's
what
everyone's
playing.
But yeah, I would say I probably spend. I'm trying to think of like an annual.
Yeah, there
budget.
you go. How much do you spend on lottery
annual
tickets
budget
every year?
So it's $2, I think, a ticket, right?
Yeah.
Is that what it is?
Sure.
Sure. You guys
no
don't
idea.
know. You guys don't know. Apparently,
Be
you
honest.
don't play the lottery. So I probably spend maybe $200 a year. On
Wow,
lottery tickets.
$200.
So what is that, 20?
Even Jat's a
Sure.
little. Even Jat's a
It's
little
more than I would have
surprised.
thought.
Yeah, it's more than
Yeah.
I would have thought. I just don't understand. Like, why do you play it? You know your chances are so small that you'll win.
I can only speak to myself. I just think it's fun.
Yeah. Okay.
Like I'll drive down and I'll go, oh wow, look at all that. What if I won that? What would I do with that?
Yeah, it's true.
And then it turns into like a little thought experiment. And
So you play so you can fantasize. Oh, what if I had win $175 million? You can't win
I don't like the
unless
word
you play.
fantasize.
Those are the arguments I hear all the time.
I think that's the wrong word, is fantasize. I think I use it to dream.
To dream, yeah.
Yeah.
I'm going to burst your bubble. You can dream without playing.
You can dream without. It's not the same. You know what?
Dream something more practical is what I'm thinking.
So,
let's say.
But is that a money trap? Do people like really go hard on lottery tickets and?
I don't know that people go hard on lottery tickets, but it's certainly one way to throw away your money. Matt said it great. You can't win if you don't play. I would just say you can't win.
Yeah,
The statistics that you're going to win are so infinitesimally small.
But you're
not gonna
saying,
win.
but you're saying there's a chance.
There's a chance.
You're telling me there's a chance.
Yeah.
I think there's two types of people. There's people like Johnny who play once in a great while when the jackpot is really big. But there are people, and you've seen them, you go into the gas stations and they're just playing on a weekly basis. They're spending a lot of money because that's their only hope in life, is if I win the lottery, that's all I got going for me.
That's their one
and
shot.
they play continually. I see it. They'll spend like $30 and they're sitting there scratching it. And I don't know. I just think it's a waste.
$100. I just recalculated. $100 a year.
Now it's less.
Like
Okay.
max a year. That's you going in once a week, to buy a lottery ticket.
Yeah.
50 weeks out of the year, that's $100.
Yeah.
So maybe $100.
Okay.
Yeah. Just think
That's
what you
not
could do
that
with that $100 though.
Another thing
Is it worth it to dream for that $100?
Well, I don't know.
I don't mean to dwell on this one. I'm just super passionate about it. I just don't understand it. You might as well just give, next time you're going to buy a lottery ticket, you want to, just give me the money. I'll go buy your lottery ticket for you and you can dream. How about that?
There you go.
Wait, if I win the lottery, I'm not telling anybody, but there will be signs. Have you guys seen those memes?
Yeah.
Like big semi truck or a
Johnny will not be
golden
showing
toilet.
up for the show.
Yeah.
Why did Johnny show up for the? Oh, did he win?
You'll never know. You'll never know.
So what are some other money traps?
Besides, so obviously the lottery tickets we discussed. Starbucks is a thing.
Starbucks is a money trap?
I would say so.
I mean, it's expensive for something that most people could make on their own, but it depends on what you're getting.
But let's get serious. So what are some serious money traps? What are some things people should avoid?
Sure. Matt touched on a great one a minute ago, was looking over timeshares.
Oh, yeah.
Timeshares can be a horrendous money trap because you're signing up for something with an open end. There's terms that you don't know about. There's loopholes in the contracts that do not work to your favor. You're going to end up paying maintenance fees that have a question mark on them. You don't know what those are going to cap out at. And this all is on the premise that you're going to go take the same vacation year after year after year.
Yeah, I don't understand the timeshares. I really just do not understand how they work. I just know I've been trapped in timeshare.
You have yourself?
Yeah, like it's like, hey, I've been at resorts and it's like, come by and win this free trip or this free excursion. Mm-hmm. I'm like, okay, I want to run the free excursion. This is better than buying a lottery ticket,
right.
My odds are better. And I go in and it's like a 2 hour and I'm like, oh my gosh, what did I sign up for? But so basically the benefit to people that they think they're going to receive is a discounted vacation. Is that what it is?
a discounted vacation, or it's this idea that you are, even though you don't own anything, you could be a partial owner of something, whether that's a cabin in Aspen or whether that's a condo in Mexico. It's having some kind of vacation ownership, like you have more than you have today. Mm-hmm. The reality is you don't. You just have a contract that says you are able to rent something for a certain amount of days per year. That comes with a lot of, again, hurdles to jump over. But at the end of the day, you don't actually have anything. And you have to continuously pay for this vacation. End of the story, you end up taking that vacation, you end up paying about 4 to 8 times more than you would have if you just booked a vacation.
Yeah.
Oh, really?
Because you're paying for this thing every single month, or one annual big chunk payment for all the maintenance, everything that goes on with a timeshare, whether or not you took the vacation.
Okay. So if I win the lottery, don't buy timeshares?
No.
Don't buy time. What else should I not do if I win the lottery? What are some other money traps?
Sure. So there's a lot of different areas where people feel pressured to put, lottery is a great concept, to put lump sums of money or make large payments of something. And this could be things like whole life insurance or annuities.
So whole life, how is that different from term? Because I know Dave Ramsey's a big proponent of term, right? What's the difference?
Sure. So whole life is, you think of it like the opposite of term. Term is a fixed period of time where you are insured. It's 15-year term, a 20-year term. Whole life is where it's lasting your whole life, in which you probably don't need insurance. I don't need insurance that's protecting the loss of my income if I passed, so that my wife still has financial stability when I'm 90 years old and we no longer are working to provide an income. I no longer need that insurance.
So are you with the whole life? Is it a monthly premium that never goes away?
That's where it starts to get more flexible, is they start offering all these different flavors. Then they call it a different package, they call it a different type of policy, but it's the same kind of thing at the end of the day. And it's extremely overpriced insurance with a built-in savings component, like you're bundling something, and that savings component just has a really bad rate of return. National averages on a whole life policy, that savings component, it's the most attractive part of the whole thing. Oh, it's an investment inside my insurance. The average annual rate of return is between 1.5% and 2%.
Dang.
Which is horrible.
You're not even keeping up with inflation.
No, you're not keeping up with inflation. It's less than most bonds. It's 1/5 the average or less of the long-term return of the stock market. It's a terrible investment.
Why do people purchase? Like, why would somebody purchase a whole life? Like, what? It seems like it's been pretty well documented that these are not good financial, choices. But why do people continue to purchase them? Like, what's the hook there?
They are very high-pressured sales products. And so the people that are selling them, either they don't know exactly what they're selling, or they do know and they're fine with, politely, ripping people off.
Do you get paid more?
Oh, yeah. You get paid an extremely high commission, much more than you do on any other insurance product type.
Okay, so that's why they're pushing these.
Huge bonuses. Whatever one might make from selling a term policy, it's more like 7 to 10 times more commission for that salesperson.
Wow.
And so because it has this much higher commission payout, I feel it could be incorrectly sold. And that's not to say it's a terrible thing. Whole life exists. It's a vehicle for a solution, but it's often misrepresented, and therefore it's put forth as the wrong vehicle for that solution that someone needs.
Okay. So whole life, bad. Term, good. What's an annuity? Where do annuities fall in all this?
Sure. So annuities, it can kind of be thought of as an insurance product or a structure. The idea is that you're putting money in so that you're getting income out. Whether that's building up over a lifetime, making payments every month into something, or putting a bunch of money in one lump sum, like if you were to win the lottery, there's an idea that's there.
What are you putting the money into though? Like, is it going into like stocks, bonds? Like,
most cases, you are typically buying an insurance product. You're buying an insurance policy, and you're getting a fixed interest rate. There can be good ways to put that together, but in most cases, they're unnecessary for what someone's needs are. We often see them missold rather than
Properly utilized.
properly educating people on what they are.
Got it. And so if somebody wants to reach out to you, they have questions about this, what's the best way for them to do that?
Sure. ThriveStewardship.com is the best way, or they can always call in. We're happy to get you an appointment, have a consultation, have a conversation about anything that you might have questions on.
Love it.
916-790-9907.
Wonderful. And hey, and if you have any questions, you're like, man, who is that Chad guy, the financial advisor? You can just reach out to us as well at madeformorerealty.com, and we'll get you connected. When we come back, I'd like to ask you some questions about student loan debt.
I only know of one person who's willing to give you at least 3 cash offers on your home in as-is condition. Only one in the greater Sacramento. Again, at least 3 cash offers on your home in as-is condition. No need to do showings, open houses, organizations, or those costly home repairs. Again, 3 cash offers on your home in as-is condition. What do? You just Google Johnny Jennings with Made for More Realty. Google Johnny Jennings with Made for More Realty and get more for your home.